Ladies and gentlemen, good day and welcome to the HIL Limited Q3FY22 results conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddharth Rangnekar from CDR India. Thank you and over to you.
Thank you. Good afternoon, ladies and gentlemen, and welcome to HIL Limited's quarter 9 months FY22 results call for investors and analysts. Today we have with us Mr. Dhirup Roy Choudhary, Managing Director and CEO of the company, Mr. K.R. Veerappan, CFO, Mr. Ajay Kapadia, Vice President, Finance and Accounts. We will first have Mr. Dhirup Roy Choudhary making the opening comments, and he would be followed by the CFO, Mr. Veerappan, who would take you through his perspectives on the financial progress. Before we commence, I would like to state that certain statements made on today's call could be forward-looking in nature, and details in this regard are available in the earnings presentation, which has been uploaded to the company's website and mailed to you separately. I should like to call upon Mr. Roy Choudhary to present his views. Over to you, Dhirup.
Thank you, Siddharth. Good afternoon, my HIL family, and welcome to quarter 3 and 9 months FY22 earnings conference call of your company. I thank you for taking out the time and joining us today, and hope that you and your loved ones are in the best of health. We have successfully achieved a 17% growth in the first 9 months of FY22 over a 19% growth which was achieved in the last financial year on a consolidated basis. The growth in our Indian business achieved in the last 9 months is 33% over the same period last year. While the supply side issues continue to provide huge headwinds, we have escalated our sales across verticals to drive our growth. We also continue to produce innovative ways to overcome the challenges faced and maximize our performance. I'm very excited with the benefits we are securing from IoT 4.0 implementation in 9 plants. This brings in transparency, preventive maintenance, a share of ownership for all to drive best performances in the factory. An aggressive adaptation of Six Sigma across all functions has further brought our family closer and is committed to deliver better efficiencies and lower costs across all functions. Let me now share business-wise updates, commencing with the roofing solution business. The quarter under review proved to be a robust quarter for this vertical, despite being a relatively off period, delivering a strong performance with sound volumes. Despite huge price pressure from competition to gain market shares, as a testimony to the salience of your brand, we continued to further improve our market shares with better realizations by maintaining grassroots connect and gaining counters. Our team have been performing advanced mapping of customers, and we have been emphasizing influencer activities to reach the consumers. While the market shares and the volumes were safeguarded, the stress in the bottom line was inevitable owing to material costs being at all-time high. Our asbestos-free roofing solution, Charminar Fortune, continues to garner customer appreciation and is well poised for growth owing to its superior quality. It retains its edge as a promising alternative to steel sheets by virtue of its superior characteristics, robust manufacturing processes, and strategic pricing. Needless to mention, this solution provides the well-needed alternative to our asbestos roofing for future sustainability of your company. As you're aware, we had a lockdown in the Balasore roofing plant operation for a short time, and the same has been resumed from the 19th of this month. We have amicably resolved the labor issues without any loss to revenue or profitability. The plant is very strategic to us and contributes 10 to 12% of the roofing revenue, and it is our chosen location for the latest announced CapEx for Building Solutions segment. Let me now come to Building Solutions segment, where the entire sector continues to face raw material related issues, did well on the back of a clear strategy by registering a 57% growth in top line and 3.7x improvement in PBT over the same 9-month period last year. We are confident to grow further in this business by entering new geographies. Our capacity expansion in Orissa will greatly enable us to meet these extended goals, though the project stands a bit delayed owing to COVID. While the raw material prices in this sector remains inflated and did dampen our profitability in Q3, we are confident that the company will be able to maintain its profitable revenue growth movement coming forward. December has been a good month for this segment, and we hope that the same momentum continues in Q4. In the polymer solution business, we have a big challenge owing to reduction of PVC price, creating uncertainty of demand and reduction in selling prices in the primary market. Our challenge is further enhanced by the increase in CPVC price, high sea freight, and constrained availability. The putty business continues to face challenges on its top line and bottom line owing to steep competition. However, the business took committed action in HIL towards expanding the sales in newer geographies and has been able to achieve 46% growth in top line and 80% growth in PBT over the same 9-month period last year in this segment. We are well poised to reach a 500 crore top line this year from the polymer solutions business. Our flooring solutions business, Parador, is continuing to face severe headwinds owing to raw material issues, truly providing our belief of together we build. The teams in India and Europe have made comfortable efforts towards getting the availability of material ascertained. However, the input costs are still considerably high. The team is making committed actions towards improving selling prices and promoting non-HDF MDF products to mitigate this crisis. This has enabled expansion of sales in European countries, and we are confident to witness quarter-on-quarter improvement, matching our aggressive aspirations of this business both in top line and bottom line going forward. With the prevalence of the third wave at HIL, we are maintaining vigilance and maintain cognizance of the change in business environment. We want to stay ahead of any and all developments and their resulting outcome to ensure that our business continues to function smoothly, maintaining its growth momentum. Combined with our experience from the previous 2 waves, we are confident of maximizing the productivity and minimizing the impact of this third wave. To conclude, we are well on track towards becoming a $1 billion one-stop building solutions company in the next few years. Our business team have displayed exemplary resolution to keep the family together, be resilient and agile, and grow the business both in India and Europe despite several challenges. Lastly, I want to thank all the shareholders for the continuing faith and support that they have shown in us, enabling us to serve your company in the best possible way. Many thanks for your patient hearing. I would now like to hand over the discussion to my CFO, Mr. Veerappan, to take us through the financial performance of the quarter and the review, and eagerly look forward to answering your questions as transparently as ever. Veerappan, over to you.
Thank you, Dhiru. Good afternoon, everyone, and thank you once again for attending HIL Limited's Q3 and 9-month FY22 earnings call. I pray that you and your loved ones are safe and healthy. I'll be now taking you all through the financial and operating highlights of the company in Q3 FY22. We continue to witness a robust financial performance amidst several headwinds in yet another consecutive quarter. Standalone revenue grew by 15% year-on-year for Q3 FY22, coming in at rupees 450 crores, and for 9-month FY22, it grew by 33% year-on-year, coming at rupees 1,478 crores over an exceptional last year. Roofing Solutions revenue grew at 11% year-on-year to rupees 203 crores on a quarterly basis, and on a 9-month basis, it stood at rupees 803 crores, having grown by 21% year-on-year. While the price pressure coupled with increased input costs have put some pressure on our margins, we have seen an improvement in our market share and thereby in the revenues. We have with this further cemented our place as leaders in the roofing space in India. Building Products saw a robust growth of 25% year-on-year in Q3, with revenues coming in at rupees 105 crores. The revenue for the 9 months was rupees 285 crores, registering a growth of 57% year-on-year. Margins were no doubt impacted by the high raw material prices in the first 2 months of Q3. However, by strategic call around action, including significant improvement in selling price, has enabled December to be a far better month for us, which is expected to continue in Q4. The Polymer Solution business experienced a robust growth of 14% year-on-year for Q3 FY22, recording a revenue of rupees 140 crores, and on a 9-month basis, it grew by 46% year-on-year to rupees 384 crores. With consistently introducing new SKUs in the market and improving operating efficiency of our plants, we expect this vertical to continue delivering robust growth in the forthcoming quarters. As Guru mentioned earlier, this business is poised to cross the 500 crore mark in top line by the end of this financial year. The Flooring Solution business grew by 10% year-on-year to rupees 373 crore in Q3 FY22, owing to raw material issues. On a 9-month basis, the business grew by 1% year-on-year to rupees 1,095 crore. The fabric of Parador is fully protected and in line with the other business verticals under HIL and now has an aggressive outlook towards growth. We have given the revenues for the business and expected profitability to follow suit as the material costs start coming down. The health of the company's balance sheet is of great importance to us. We have reduced the debt further by rupees 33 crore in Q3 and by rupees 135 crore in the 9-month period. The debt now stands at rupees 274 crore. On India level, HIL continues to be a net debt-free company for the 3rd consecutive quarter. The total debt-to-equity ratio has improved to 0.24 as on 31st December 2021 compared to 0.41 as of 31st March 2021. The net worth of the company stands at rupees 1,131 crores, having grown by 18% year-on-year. In conclusion, I would like to reiterate that we are making strong progress towards our $1 billion goal despite facing some pressure on the profitability side owing to the inflated input cost. However, we are certain that these issues are only temporary, and once normalized, the company's profitability will improve meaningfully. With this, I would like to conclude my opening remarks. I request the moderator to open the floor for questions. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. The first question is from the line of Amit Vora, an individual investor. Please go ahead.
Good afternoon, gentlemen. Congratulations on a good set of numbers in a tough environment where all raw material prices have been going up. You have done an excellent job in even reducing the debt, which shows the strength of our execution. Great work on that aspect on execution. The question that I have majorly is on the Parador flooring segment. One of our the Indian leading supplier for MDF has indicated that they have increased MDF prices by around 17% in Q4. So how are we mitigating this, and if we have taken price increases, what have those been? A similar question is on the roofing side as well, because we are seeing inflationary pressure on raw materials on the roofing side as well. So what has been our strategy there? If we have taken price increases, what quantum have they been? Thank you.
Thank you very much, Amitji, for your kind words. Means a lot to us. Coming straight to your questions, let me take them one by one. Parador, as I mentioned, is continuing to face severe headwinds owing to raw material issues, primarily now on prices. The team's effort made in the last 2 quarters has ensured availability of material to a great extent. However, the input costs are still at very high levels. The team is taking committed actions towards improving selling price and promoting non-HDF MDF products to mitigate the crisis. This has enabled expansion of sales in European countries that we have seen over the last 9 months. We have grown outside Germany by registering a 22% growth in Spain, 19% growth in the United Kingdom, and 14% in China, amongst other growth. This will augment very well for our growth plans in Parador in the coming quarters, and we expect to grow quarter on quarter, both in top line and in bottom line. Selling prices have already gone up by 13% in Parador, and this quarter we will take that up further. And we will take all actions towards further reduction of controllable costs and efficiency model for Parador to get higher revenue and higher profits to sustain ourselves and make better profitable growth going forward.
Go ahead. Sorry.
You have a supplementary question on that? I can answer that and then take on roofing.
No. You complete on roofing, and then I talk about follow-up on flooring.
Thank you. On the roofing segment, of course, there is considerable pressure by our competition to reduce prices because our exemplary effort in Q1 on gaining market share, which has gone up to almost 25% in Q1, wanted to be equated. We certainly depended upon our last leg connect. We have testimony to the salience of our business continue to further improve our market share. Market share in Q2 and Q3 always comes down for HIL because we don't want to strike on prices. Our brand stands for it. The difference of prices between our competitors has only gone bigger, but we have not let our market share slide, which is currently at 22.3%. We will continue to maintain this market share over Q4 as well. But Q4 is a favorable quarter for roofing because we start preparing for our next season, and we are very hopeful that the next season will also be very good coming forward, and therefore we have already started ramping up our all actions towards this. Prices will go up this quarter further, and hopefully this business will deliver very good results in Q4 as well.
Thanks for the answers. One follow-up on roofing is that this quarter we have been profitable compared to last quarter, and our profitability will only continue to improve is what you are indicating. Is that the right way to look at it?
Q4, definitely the profitability will be better than Q3, considering that we have taken a lot of action in mitigating the cost aspect through R&D contribution, as well as our selling prices are expected to go up immaterial of whether our competitors raise it or not. There is severe pressure in the bottom line for lack of words. Every material, cement, fly ash, sea freight, everything is pushing the bottom line immensely. It's going to be a foolish business stance not to pass on part of it to the customers. We will do it based on our brand and connect. I hope that our competitors also do that to make this market a better place for all of us as producers.
Understood. And as you just mentioned that Q4 and Q1 are the outlook remains pretty strong. If there is a quantum that you are looking in terms of price increase that you have taken up in Q4, if you can give flooring and even roofing, if that is possible.
Amitji, as I mentioned to you, in flooring, we have already taken 13% price up to Q3, and this quarter also we are planning to take a further price rise with our customers. In roofing, this is the quarter we will take good jumps on our selling price once again, and we have started already taking those levels. We will be able to discuss this better once we have been able to achieve it across the country.
Great. Thanks for the answers. I'll jump back in the queue. Thank you and all the very best.
Many thanks. Stay safe.
Thank you. The next question is from the line of Baidik Sarkar from Unifi Capital. Please go ahead.
Mr. Chaudhary, good evening and congratulations to you and the entire team on a very stable quarter. If I can request you to break down the supply chain issues in Europe in some more detail and fabricate how much more we need to cover in terms of feedstock availability, I would really appreciate that. I know in your opening comments you've mentioned upon the possible change in feedstock mix, but if you could just break down the issues that you're facing right now, it would really help us cover ground on that aspect.
Thank you. Your line was not very clear, but I guess I've got your question, Baidikji, and you can correct me always. So first of all, thank you for your appreciation. In Europe, as I mentioned, we have worked very hard to bring the materials to our shop floor. We had a big problem in Q2, and that was all of a sudden. And this is nothing to do with Paradol. It's to do with the entire flooring segment, which is lamenting because there's a sudden boost of demand for the furniture segment in Europe and lack of availability of raw material, primarily HDF, MDF. But we have sorted that out now. So material is not an issue in Paradol anymore. We already have mastered enough. Price is an issue of our raw material, and that's at the highest peak level. If you ask me honestly, I do not see that coming down yet. But as we understand from our competition, and I think our speaker before this, Amitji, mentioned that HDF, MDF in India are taking further price hikes. We do not see that in Europe. We definitely see that it's plateauing to some extent. I'm not saying that it's coming down, but we will take all actions to ramp up our production further. We have taken up an extra shift in Europe, considering that we have materials. We are at all-time high order book backlog because we have been able to get across to new customer, acquire them in Europe, as I mentioned about some of the numbers with the close by countries. And we have been able to master our stocks also for B and C class products, which were needed for the DIY in Germany. So DIY in Germany are not so good at realization, but very good at volume, and we don't want to lose that. So now that we have taken actions on availability of materials, which are all in red against last year, but that's the price part of it. From availability, we have sorted it out. Now it's a matter of looking forward and getting quarter-on-quarter benefit on that. So I confirm to you, Baidikji, you have stood by. Thank you for it, for your patience. We are working very hard. So Q3 has been better than Q2. Q4 will be better than Q3.
Right. So if I could, just zoom out to the current quarter and invite your comments on how you think our execution is likely to be in the roofing segment this summer, that is Q1. In general, how's the pricing environment and the competitive intensity? And I know these are very early volume growth range you think exists in the market for us to take, given where fiber prices are. Your comments on that, please.
You're talking about the roofing, aren't you?
That's right. In Q1,
yes, roofing
what you think are right
roofing, we will continue to lead the market. We are number one. We will not let that go away by any chance. We have taken a different route altogether. If I draw it, because you have been speaking to us for a long time and you've been associated with your company and HIL for a long, sometimes in Q2, Q3 of 2020, I think we went down on our market because we were unable to capture the market at a price we wanted to, while the competitor was lowering price and grabbing on the shares. We did not allow that subsequently. We have gone into the last leg connect And let me assure you that the digital connect, the pin code connect that we are doing, working with the Masons, it's really adding value. We've taken at least 1,573 councils away from our competitors, and we are securing our position in the market. So I'm looking forward to an excellent quarter one, if you ask me. Much better than even a bumper that we had this year.
That's very helpful. So if I could just squeeze in one last question, Mr. Chaudhary. I understand acquisitions are a very important part of your $1 billion journey. Is there a segment, is there an adjacency we've identified we'd like to get associated with an organically?
So let me tell you totally how we are planning this 1 billion so that you have a clarity far better than earlier. So we are looking at all adjacencies. So there'll be three basic drives of our growth plan, other than the normal growth in the businesses that we'll do. One will be Paradox. So we are already in very good progress in discussing with some of the key influencers in Europe, if I may say, also taking help from Big Four, to try and see how we can get Paradox to the 350 million range. We are at about 170 at the moment, 170, 180 million. And we want to double from there. So that's the top line. And with that, the profitability improves in Europe. Once you have the top line, then the bottom line definitely smoothens out because there's a lot of fixed costs that gets apportioned. So I can tell you, I feel far confident than before, even with the prices of materials and other things that are haunting us, but I feel far comfortable that Paradox will grow. And more so because we are seeing the traction that we are getting in the order backlog, and our revenues has been by far very good in Q3, which were excellent last year, but we have met up the revenues to a great extent, and Q4 will be, I think, one of the highest is what we are trying to do in Paradox. Coming to the second vertical that we will pep up will be the pipes. So as I mentioned in my opening remarks, we are hoping this segment clocks the 500 crore this year. A lot of effort has to be done in that. There are a little bit of a slide down in the market owing to PVC prices going down. The temperaments are low. But I think this is just a temporary phase. We are going to match this up. And the deep dive that we are doing to tier 3, tier 4 is really supporting. A little bit of brand activity that we are doing is also supporting. So overall, this business will become 1,500 crore, including putty. Is for certain. That's what we are aiming for in the next 2 to 3 years' time. And then there'll be the normal business of roofing and building solutions, where we would add more factories as we go forward, but it'll be like the logos, you'll have to add factory and then get the revenues out of it. But we have found a profitable model there. And Q3 was slightly daunted on profits in this segment because of material costs, but December was a fantastic month, and hopefully that will continue in January, February, March as well. So you'll see the results. The next bit are adjacencies. So a lot of work has been done by our team on the adjacency, and last time I had alluded to it a little bit. We are looking at water tanks. We are looking at new SKUs of pipes, including some of the newer things that we don't have it in the present roles. We are looking at construction chemicals like tile adhesive, primers, etc. A lot of effort is being done. I'm presently monitoring this almost every week, and I can tell you that this team is bullish on this. There's a lot of synergy that we have with our deep dive retail connects that we have. So hopefully very soon in the next quarter or two, you would hear some good news about this traction picking up. So there's a lot that is happening, I can tell you. The team is absolutely excited, and this will be a one-stop building materials, building solutions company, is my word for it.
That's very helpful, sir. Thank you so much, and my best wishes, for the next 1 billion. Thank you so much.
Thank you, Mr. Sarkar. You have a good life too.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. For any further questions, you may come back for a follow-up. The next question is from the line of Sagar Jetwani from Phillip Capital. Please go ahead.
Hi, good afternoon, sir. Thank you for the opportunity. Sir, a couple of questions. One on capacity utilization across the business segments, and secondly, your effective tax rate was around 37%. So can you give a reason behind that?
Sure, Sagarji, but don't call me sir, please, from the next time. We are all working for the same goal. Thank you very much.
Thank you.
Capacity utilization for AC, that is the roofing segment, is highest in quarter one, and then it becomes highest in quarter four. This quarter four will go all out from February onwards, or March, or middle of February onwards. At the moment, I can say Q3 was about 75%, and on a 9-month basis, we were 84%. Quarter two and quarter three are always less on the capacity utilization. On the block side, we are absolutely full up to the extent that we can, 95, 96%. We can't go beyond that. Panel side, we are absolutely full up, roughly about 93, 94% is what we achieved in quarter three, I guess, in panel segment. Board is 100%, and you know we have set up a new plant for board in Faridabad. So that and the Hyderabad plant, both are 100% full up on board. PNF, that is the pipes and fittings, is doing very well. It has already come up to a 53% capacity utilization, with Faridabad almost 85%. So we will ramp this up further as we are expanding this business. And putty is also about 59% in quarter three, and we will ramp up further where there's needed. But a lot of putty is bought out also by us under our brand. So Parador is doing extremely well in quarter four. They'll be full up actually on their capacity, since we already have mastered the material.
And second question on effective tax rate, sir.
The tax rate. So Ajay Veerappan, may I request you to just answer this question, please?
Yeah. So this tax rate is, we have taken some provisions in Parador. Parador, what happens is the tax is always calculated based on provisions, and once in 2 years there is an assessment happens. And so prior to based on the assessment, the certain expenses are disallowed. So those expenses are demand has come, and which is being again disputed. So it's a nominal amount, but we'll be settling out before March. So there are some provisions we have taken conservatively in the tax, that's all, which will get offset in the next year.
Okay, thank you.
Thank you. The next question is from the line of Shubham Agarwal from Equitas India. Please go ahead.
Yeah, thank you. And first of all, sir, I'd like to congratulate the entire team for the significant progress made Q on Q. Sir, my first question is regarding the roofing division. I wanted to know generally in terms of demand, how is this division shaping up, given that competitors are planning to come up with new capex over the next 6 months, and also that we are getting slight mixed news as far as the rural health is concerned. So I would like to know your views.
Thank you, Shubham. Please don't call me sir next time, but thank you for your question and for your greetings. Roofing segment, Shubham, we are the king. Sorry, I'm being extremely bold on that. We dictate the market, and we love to do that. We are price leaders, we are quality leaders, we are distribution leaders, we are the connect leaders with the customers. And I think what you're seeing here is a dividend of a very, very resourceful strategy that we have put in, and the commitment from the team. We see that business going very favorable to us. Yes, we definitely hear competitors scaling up their production capacity by adding. I don't think you have money in your company to spend 80, 90 crore in setting up a new line for asbestos. I'm sure as a promoter of this company, you won't like to do that. And we definitely won't. We have other means of improving our capacities in the plant by automation, by Six Sigma, by IoT, Internet of Things. We are doing all of that that is required to ramp up our production. We are absolutely capable to meet up any demands that the market throws on us in quarter one, and remain on top of it. So we don't need to add any capacity, and we won't in a hurry in roofing segment, sir. We will not let go the market share that we have grown over the years and the brand we have grown over the years. So I'm very bullish on that.
Fair enough. And secondly, can you also give us some numbers regarding how is the traction in the color roof and non-asbestos part?
Yeah, so non-asbestos primarily was made to basically safeguard any eventualities of asbestos getting banned in the organization. We have got the humid cure product now well established. Its quality dominance can be seen and witnessed. It's a small base, but we have grown 3x this year over the last year. And this product has been well accepted by the clients. And this year we should cross, normally in non-asbestos in the whole country, the market size, one is to hear, was about 12,000 metric tons. We'll already supply 15,000 metric tons this year, and we'll pull ourselves towards doubling that and tripling that in the coming months, and you would hear that. So it's showing good potential, sir.
Perfect. And secondly, my question is related to the roofing segment. As you already mentioned, in last quarter itself that the order book was pretty high, almost all-time high, and currently also the order book is very high. And as far as raw material is concerned, availability is already sorted out. So my question was slightly near term as to whether we will see a significant increase in capacity utilization in Q4.
I think your question is on flooring. Am I right?
Correct.
Okay. So I mentioned that to you. We will go all out on production in Parador in both the factories. And, there are certain limitations that the government puts across on the number of hours they can put in, but we have started a new shift in Coesfeld, Germany. And let me confirm to you that while COVID looks bad in Germany and in India, none of your factories are at all stopped because of COVID or any implication on COVID. Our teams have kept it absolutely clean and safe for the purpose of working. And Parador will go all out in Q4. So you should see a good movement on that.
Perfect. Thank you, sir, and best of luck for next quarter.
Thank you very much. But I caution you that the profitability of Parador will take its time to come back because the material costs are high. But we are trying to get maximum top line, and with that will come the profitability. Thank you very much.
Understood. Thank you.
Thank you. The next question is from the line of Shantanu Basu from Smiths Limited. Please go ahead.
Yes, hi. Thanks for the opportunity. So my first question is with respect to the strike that happened at the Balasore plant. So I want to know what was the main issue. And I missed in the earlier part of this call, you mentioned that there may have been some price cuts in the pipe segment, and there's also been some price reduction in the roofing segment. So want to know the quantum of all those. And lastly, do you see that, what was the percentage of Charminar Fortune sales as a percentage of total roofing, if you can give that figure, please?
Thank you, Shantanu. And let me answer one by one. If I forget something, please remind me. But on the strike side, Shantanu, this zone is quite prone to it, and nothing wrong. They have their demands, but it's going on. It was going on for a long time. I'm now completed 5 years in HIL. We didn't have in any of the factories till now, but this was a time when our demands were low. This is also a time when roofing demand normally remains low, and this was the time we therefore decided to implement some automation in the plant. It came up with a bit of a backlash, but we have sorted it absolutely amicably. They are wonderful people, and we take care of them, and they understand that we will take care of them in long term. The local government also supported us. So absolutely no problem, no loss in revenue, no loss in profitability, except a little bit of maybe freight charges that got increased because we had to ship the material from other godowns, but we didn't miss sales at all. Coming to your next question on price cut, sorry, I didn't get it, but we haven't done a price cut in roofing in quarter 4 at all, and we don't intend to. We will increase the price in roofing in quarter 4. Quarter three also, if you see, realizations have been better than quarter three last year by about 2%. So we are doing well on price. On the pipe side, the selling price follows the material price, and the market therefore expects a reduction once the PVC prices go down. And in India, that's something which is extremely volatile, and it's at the moment going down. So we are managing that. There's a lot of improvement back at home that we have done on the efficiencies of machines, as we have already moved ahead of 50% utilization, and we have strengthened the team. We have worked from R&D on pipes to reduce the cost, and everything is working fine. So we are hopeful. The margins of pipes have also gone up over last year, and while the growth has been quite good, 60% in pipes, the margins have also gone up. So I don't see a problem. There was one more question you had, sir.
Yes, I just wanted to know the percentage of Charminar Fortune with respect to the total roofing sales.
I answered that. It is absolutely low. Charminar Fortune is only going to be 15,000 metric tons in this year against a total sale of 800,000 metric tons that we'll do in roofing or more.
Okay, so I mean around 1 to 2% of, or maybe less than that, of total revenue.
You're absolutely right. 2%.
Yeah. Okay. Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Bharat Seth from Quest Investment Advisors. Please go ahead.
Hi, sir. Congratulations, Mr. Dhirup.
How are you, Bharatji?
Fine, sir. Thank you. And good number in challenging time. On this Parador, we have been successfully able to diversify from Germany, and that has started showing. Now, going beyond, if you can give some color about China as well as the US market that we were looking. So, from that perspective, and second, of course, now we were also looking for an expansion in this plant, but since now this availability of raw material is challenging. So how do we see this business again from, say, 3 years perspective?
I tried to answer that earlier, but you have asked some very pertinent questions, so let me try and revisit them. Bharatji, the fabric of Parador is absolutely safe. And if you trust me, you will trust what I'm saying. We have gone through some difficult times, and this is not Parador alone. All the flooring companies in Europe have lamented against material availability and price. As we speak now, availability is sorted out because we are getting materials from all around, and many more suppliers have been added, and very astute negotiations have been conducted by them, and we have been able to get that. Sadly, even the shipping costs are very high, but it's definitely going to subdue in the coming months. So we now have the material, let me say that way, and we want to now ramp up production. Parador will move up to 350 million in the next 3 to 4 years, sir. And we will achieve that by expanding Parador to many more countries. Germany, Austria constitutes 50% of their revenue, but that's changing now. The balance of the countries in Europe constitutes about 25% of their revenue, and that's changing and going up. And the rest of the world was 25%, and that will change. There were some hiccups in the dispatches outside to different world countries because of COVID and sea freight, but we are finding a means to ramp up production in Europe itself. There's a huge demand of flooring in Europe, and that has only gone up after COVID. So we are maximizing that. Our newest product there, which is Modular One, which is a resilient flooring, is a fantastic product, and that has thrown up so much of potential for growth, and it's selling literally like hotcakes, and we are proud of the team, what they are doing with their design and development in Parador to meet up to the expectations of influencers in Spain, France, Italy, Nordic country, Switzerland, United Kingdom. They are all different. We are also setting up logistics centers, or soon would be setting up logistics centers in different parts of Europe and UK with the Brexit that's needed, that we have local logistics there. So that is something that we are already working on. United States, the JV a bit of a time. We haven't been able to conclude yet, but I think in a month or two we will conclude that, and that will just be a beginning in United States. China has grown 14% over last year, but there is huge potential. So let this COVID be slightly more dampened, and then further visits to China and strengthening that team, and all those things will happen. You would see a lot of vibrancy in Parador in the coming financial year, and I think the pedestal is all set for that.
Okay, great. You stated about doubling and tripling of this Charminar fortune in coming time, but when do we really see a meaningfully contributing our top line and EBITDA? And second thing, since the technology on which we were working that to reduce the price gap between asbestos cement sheet and this roofing system. So what level we have been really successful in achieving that?
So yes, the ramp up has taken time, primarily because earlier we went with the autoclave technology, and later we found that was becoming extremely expensive because of power consumption and capacity. Because autoclave always defines the capacity of manufacturing. So now we have gone with a new technology, again homegrown. IPs have been all announced, and the journals have announced it, and it's been registered. So that is our now IP. And that product is showing extreme good quality, strength, from all angles. Customers are liking it. The colored part of those, we have 6 variants of colors. They are fantastic. So I think now nothing can stop us from growing in this. Yeah, it's going to take time because this is all an institutional segment that we sell, and they have for many years shifted to steel, and to convert them back to cement-based roofing takes time, but it'll happen. Meaningful, if it is 100 crore, it will happen in the next 2.5 years' time. If it is 500 crore, it will happen in 5 years' time.
Okay, great. And last question on this polymer business. So where we wanted to grow, say, exponentially and grow around 1,000 crore or 1,005 because the opportunities are large, and we also want to expand the capacity. So what stage we are now, and after this 500 crore teaching in this year, how do we see this business and further capex for new plant?
So you see, this is a very interesting segment. There were lots of questions all of us had, including you and I, on whether we had done the right investment strategy in getting into polymers, because there are very, very big players there, and I don't want to name them in this call. But we tell you, we have made a good, meaningful beginning in this, and our brand is stabilizing. The influencers, our plumbers, are showing a lot of faith in it. B2B segment is growing in the pipes, which is now almost 25% of the sales. And we have ramped up from 8 crore per month sales to now crossing 30, reaching towards 40 crores per month in pipes, and putty has also shown a good ramp up. I think pipes this year is already growing at 65%. Ajay, you can correct me there. And these are very, very good numbers, which we are proud of. This segment will grow, sir, and I've committed to everyone, and it's a commitment to me, myself first, and then to all of you. This segment will be 1,000 crore in the next 3 to 4 years, if not earlier. And, reaching a 500 crore makes it meaningful from a contract negotiation with material supply, because material becomes a very important part of this business, both for putty and for pipes. And therefore, that milestone is going to augur well for our future growth, sir.
The last question, if I can add, if you can give some color on geographic spread, and how do we want to become a pan-India player, in what time frame?
On the polymer business, yes. So at the moment, we have become good, consistent player in North and in West in polymers. I think pipes very difficult to mark the market share. We may be 1 or 2% there, but in putty we are almost touching 5%, which is a good bit in North at least. We mapped the total of two of our biggest competitors there, and we mark against them, and we are doing very well actually on putty also. So the next was South. So we built up a plant in Hyderabad. Incidentally, we'll be coming very soon to the board again for an approval of a short capex to augment that capacity and add on HDPE and foam pipes into our profile. And the South has picked up very well on pipe. And the next bit that we are trying is in East. There are significant capabilities that needs to be grown in East because we are very far from East for all our plants, and the freight element becomes very, very high. So we'll have to look at alternatives in East, which we will soon come to you with as we are discussing on the whiteboard, and to grow in East. So we don't want to leave any part of India. We want to be a pan-India player, and we want to be amongst the big players.
Thank you and all the best, sir.
Thank you. We need your blessings all the time, Balaji.
Thank you. The next question is from the line of Nikhil from SIMPL. Please go ahead.
Hello. Hi. Good afternoon, Dhirup, and congratulations to the whole team for good set of results, especially in the environment we are in. 2-3 questions. One is, Dhirup, a bit more on the flooring side, and I'm just in last quarter call when we were discussing, and you had mentioned that there were some players who had the in-house MDF manufacturing and who were also into flooring, and those guys were relatively better placed than us in terms of the material supply and also on the pricing. Just wanted to understand now, and if I attach to what you said just now, that in Q4, Parador is seeing a very strong order book. So just want to understand, is it the market growth which is helping all the players, or we have maintained the price differential versus the second or the third player versus in each of the markets, and that is helping us to maintain our market share? Where I'm coming from is to understand better on the competitive landscape and how are we able to compete, and we not having an MDF plant, does it become a handicap in any way for us to scale up the business?
Extremely good question, Nikhil, and I'm sure it will be validating many of our thoughts and to everyone on this call. First of all, let me start backward. Is HDF, MDF something that we want to have in our manufacturing scale up? I had mentioned this last quarter also, and I'll repeat that these manufacturers were lamenting for good 5-6 years if you leave out the last current 12 months. Their profitabilities were low in Europe. I'm especially talking about Europe. They had closed down their manufacturing plants. You talk of Ryder, you talk of Sonealco, you talk of some of the big names there. They'd all closed down their HDF, MDF plants because it was non-profitable. The investments are very high. And if we are to ever dip into this, it will be a very high investment, 250, 300 million euro for a plant. And we would only use about 20-30% of the capacity, and then we'll become a B2B player trying to supply this product to other manufacturers, which is not what we want to do because the margins won't be as good. And it's only the market. You wait and watch. I mean, these prices are going to come down, and again, the profitability will become a question of concern and realization on the capital they have invested, all of that. That's my count on that. Only about 20-22% of our competitors have their own down the line HDF, MDF capacity. All the rest buy from outside. Therefore, there is a good competitive landscape where we compete. Our brand is number one. So, Nikhil, just correcting, we are number one in Germany in brand. And therefore, we have continued to maintain that. Our issue was, can we grow outside Germany as well and spread our wings? Because I always meant to, scatter the product and reduce our over-dependence on Germany. And I think this has given us a good window to do so. And I mentioned about some other countries where we are moving in. So the competition in each country is different, Nikhil. So we are not tapping against the same guys, and it's not important that each country has HDF, MDF manufacturers or local manufacturing capabilities. So it's quite a different landscape in different countries. The levers that the consumer uses are different. The preferentials are different, what they are looking for. And we are trying to compete by local teams there. So we are setting up local teams in each of these countries to really align to what is needed to gain markets there and pricing. So we are not cheap. We are not cheap. So we are not pegging the price and leaving behind some cookies and thereby gaining market share. No, the market share gain is by customer acquisition. It's a hard work where you're converting the customers in. Say there is a residential segment and there's a commercial segment. So in residential segment, mostly people buy from either the DIYs or they have the workmen who buy for the contractors who buy for them and do the renovations at home. Roughly about 60% of the market in Europe is renovation and 40% is new, or even 30% is new and 70% renovation. So they've done a lot of renovation during this time after the COVID because they were sitting at home. It's called the cocooning effect, where they were sitting at home. They were not spending on their travel, so they were doing. So all of that has helped in the market to grow. We have tried to capitalize wherever possible. We could have been, let me tell you very honestly, we could have been 200 million already had we not faced the problem of materials this year. But with the good order backlog that we have, I think presently, Ajay, again, correct me, it's about 18, 19 million already. And that's a good order backlog to house for. Normally 12, 13 million is a comfortable order backlog that we carry because most of it is order book and bill in the same month. So we're sitting in good order backlog, not because we are at all leaving anything on the table and getting a low price, but because of our connect.
Okay, just one follow-up here, Dhirup. Thanks for the detailed explanation. Why I'm trying to understand the competitive landscape is because if I understand, and I think over the calls, the way we've understood Parador is like Parador is the leader in terms of the new designs and the design people which Parador tie-ups has. Parador is able to get the best product at the best time in the fastest way in the market. But in the environment where we are in, like where prices are so high or like 15% price increase we ourselves have taken, is the influencer decision moving away from the design to the price, or they are still sticking with the design, which means that the competitive landscape or the advantage, which the moat which we talk of Parador has created sustain. So just trying to understand, has there been any change in the influencer decision making because of so high price increases which have happened?
Again, a very, very good question, Nikhil. Thank you for asking this. It gives me an opportunity to explain. Let me again segregate the business of Parador into two. One is residential, one is commercial. Commercial businesses are all done by influencers, the interior designers, their own consulting groups, external consulting groups for big projects, malls and hotels and other things. They are completely done on design. They want new designs. They, in fact, sometimes comes and jointly works with us for design. So design becomes a very, very imperative part, and then comes the quality and price. And quality is mostly given, so it's design and price. When it comes to residential, they buy from DIY. So there it is A, design, B, price, but mostly it is the technology. That means if there is a bathroom, they can't get wood there, so they would need a vinyl where the waterproofing is there and things like that. So it's more about where to get what type of product. That's influence. What is changing as we see fast is also the e-business. So a lot of this e-business is coming in where they are ordering from the net, but those ordering are with cheaper products from China. And that's something we don't operate anyway in. So we also have our, business to E here. So we have our own business store at the internet. We have started that about a year back, and that's doing really well. This actually did very well during the COVID when we were doing shipment from our factory to the customers directly. I don't see a big change there. Design and brand will still play a good role, and Parador has its way to go through that.
Sure. Thanks for the explanation. Just one last question I have. On the AAC blocks, and I was taking a call of few listed companies and even talking, and there is a significant market shift which is happening from the red bricks to the AAC blocks, and there is been some price increases as well. Are you witnessing a similar kind of a scenario for our AAC blocks, or do you see that the market shift is still not happening, or how do you see that scenario evolving? Because 3 to 4 years back,
very strong market shift, let me tell you. And more so if you are agile and you've been able to move from the A-class cities to the tier 2, tier 3 city, which we have done. There's a lot of construction work that is happening there, and therefore we are trying to get that benefit. We have raised our price a good bit in December, and it has sustained, and that's going to help us in the quarter 4 as well. So yes, we see a good benefit. Our plants are 95-96% full. Actually, if we have more products to sell, we can sell it. We are getting good traction on that.
Sure. Thanks a lot. I'll return back to the queue.
Many thanks.
Thank you. The next question is from the line of Manish Dhariwal from Fiducia Capital Advisors. Please go ahead.
Am I audible?
Very clear, Manish. Tell me.
Yeah. At the outset, let me say that, listening to you, I think is one of the best experiences that I personally get each quarter. And I make it a point that I attend your call and the conversation that you conduct. So thank you very much for that.
Manish, that's very kind of you. Let me tell you, from the point I come from, I work for you. And I work for the company where you want to invest or you're already invested. And therefore, I have to do my job by being transparent, and I only bring out facts on the table. Thank you.
That's wonderful, and that actually adds to the whole thing. Now, Dhirup, we've been like very, very expressive on the fact that we are on way to becoming a $1 billion enterprise and basically concentrate on the building solution side. Now, so that's like, chasing sales growth. We also had a leadership on the profitability and thereby the return ratios, which I now see is getting impacted because the new businesses that we are kind of getting into are obviously like, lower margin relatively compared to the original business of asbestos sheets. So basically over a period of time, what's going to happen is that our operating ratios are going to weaken at a consolidated level, and thereby the return ratios are going to get impacted. That's one. The second thought that I had was that the new products that we are getting into, like pipes, like water tanks, like like some sort of chemicals and some these blocks, etc. Other than Parador, which obviously I would say is certainly not commoditized because there's a strong design element there and there is a price point that you basically work at, that it is the number one brand. But then the pipes and the water tanks, etc. Meaning they are more commodity side. So which obviously will basically lead the organization to pressure on pricing, on the volatility of the raw material movement, etc. So if you could, kind of share with us some perspective on how you are seeing the organization over the period of time on the subject of profitability and thereby the return ratios.
Thank you, Manish. Manish, I will be very honest with you again, okay? And let me give you my mind. If you like it, excellent. If you don't, please call me back later and we can have another set of calls on this. Look, if I had to grow HIL, what I found HIL to be was a great company when I joined it 5 years back, but 1,000 crore with 100 crore EBITDA. And for 70 years that it had already settled in, this is the 75th year of the company. 70 years when I came in, I didn't think it has done its work. The question was, should I continue on roofing as we had, because we had 86% dominance on asbestos roofing during that time. We would still be reaping as number one. We would have an excellent profitability, give or take 20%, 18% EBITDA. That was one aspect. The second was, how do I grow this company? Now, we decided to take the building solutions route and say we want to be a house name. We want to be a one-stop solution. We want to be so-called the leaders in this segment in times to come. And a vision of 1 billion was not mine. It came from the team where we did a deliberation together. We were 140 million then. 1,000 crore was 140 million with the US dollar that it was. So from there, we've now come to, I don't know, this year we should close 3,400 crore plus. So 1,000 to 3,400. That's the ramp up that we have done. Now, we have to ramp up in newer products. Pipes is a vast business cycle. You look at it as a commodity. I don't look at it as commodity. Sorry, pardon me for not agreeing with you, because look at all the big players there. A commodity is where you will have a constant single-digit profitability unless you are monopoly, and the market cap will be designed only by what you have. There'll be no buyers from you because you are monopoly there. Pipes is not that. Look at the valuation that Astral has, the Prince has. I mean, the market is booming with valuation. What I decided for you and for HIL was we have to have a profitable model at a steady state version. So we will always start with a single digit, but we'll ramp it up to a double digit. That was the idea, and also see the benefit of the market accepting it. And pipe definitely will be a good segment that you should look at: growth versus profitability versus valuation. Similarly, now the other part of it, roofing we will leave out. Flooring we will leave out because you left it also. Let's talk of chemicals and other things. What are the adjacencies? Where do I go? Should I get into a sanitary ware? Should I get into tiles? Should I get into carpets? All of this has been worked out, and we found that possibly, the huge network that we have around the country of retail space footfall. Each of these stores sell chemicals in some fashion or the other. So can we get into that? And we look at, how the market reads it, and some of the big companies which are doing wonderfully well at 14, 15% EBITDA. We said that really looks good, and that's something that we want to be because it is also a brand play for us. There is no chemicals with Birla brand. And, can we move into that? So all of that has been considered in order to provide for this. Look, whenever you get into any new business, the profitability will be low, sir. But when you really ramp up the business and come to a steady state, you will come to, and my aspiration is not very high, so it will be about 12 to 14% EBITDA. I think I'll be very happy with all the businesses being there.
Okay. No, see, it's very useful to get a perspective. And
sorry, Manish, yes. I'm not able to hear you now.
Oh, okay. I beg your pardon. Yeah. I was saying that thank you so much, to share your perspective with us. And I understand the challenges and obviously the thing. So wonderful. Yes, I get the perspective. Thank you so much.
Manish, you may not agree with you, and you have all right to do it. And as an investor, please call us back and give us your input. And if there is any other vertical that you want HIL to do, if it makes meaning, we will do that.
Wonderful. I would take this opportunity very seriously, and thank you so much. I will get in touch. Yes. Thank you. Thank you so much.
Bye.
Thank you. The next question is from the line of Satish Kumar M, an individual investor. Please go ahead.
Yeah, good afternoon, Dhirubji. Congratulations for the good revenue growth in the challenging time. And my first question, crude oil prices are increasing nowadays. Will it impact our raw material price? That is my first question. And the second one, So there is an extension of PMAY scheme, central government scheme. Will it benefit our company, especially in our roofing segment? First these two questions, sir. Thiru ji.
Thank you. Thank you, Satish ji. Many thanks to join the call, and thank you for investing in HIL. So yes, crude oil will have an impact on raw material, and I don't think any company will tell you otherwise. This will have an impact on the shipping prices. We are almost double at the shipping costs, depending on which zone to which zone you're talking about. It will have impact on the local trade in the country. So we can't avoid that. It will have an impact on polymer business, which is linked to oil, chemicals. So all of that is there, but we have to find a way. So business is all about looking at these challenges, having a very clear charter of the challenges, and working out a dimension how you will be still successful. And I think that's what the team is trained for, and we have a fantastic team on the ground. So rest assured, we will take all actions that's needed to keep your company safe. Your second question was on the government policies and other things. It is definitely good for us, and we are taking all actions that are needed at state level in implementing it and ramping up our product businesses to it.
Thank you, Dhirubji. Last final one. I think our promoter holding is not that much great. It's around 40%. Can we consider buyback in nature, Dhirubji?
I would very honestly say I'm not the promoter. I'm working for this company, so that decision I can't make. But the board will do it. Thank you. I will put up your point to our promoter.
Okay, thank you, Dhirubji.
But my stakeholding will go up if you're asking about my personal bit. Thank you.
Thank you. Thank you.
Thank you. Ladies and gentlemen, we take the last question from the line of Chirag Shah, an investor. Please go ahead.
Good afternoon, sir. Congratulations on a good set of numbers. Sir, I had a few questions on the building solutions segment. Is it possible to give a breakup in the revenue of the AAC blocks, boards, and panels separately? That means these three segments.
I could, but I don't have the numbers here, number one. And number two, it is not fair because we take this as one business now. So plants are also common, and therefore the costs are all divided. Therefore, we normally take it as one block. But you can take it that about 20% would be 20-25% will be your blocks, your panels, your boards. So there'll be an equal division more or less.
Okay. So, and who would be the market leaders in these three segments?
So in blocks, we have about 50% of the market, which is unorganized, which are small players, mostly supplying AAC bricks, not blocks, which means it doesn't go through the autoclave. And the other 50%, we are number one. So we have about a market share of about 19%, overall, and 38% if you leave out the unorganized sector. That's in the blocks, so we are number one. In panels, we are again number one. The total market for cement-based panels is about 120 crores or something, and we have a market of our business is roughly about 50 crores, 60 crores in that. So we are again market leaders in panels. Boards, we are not market leaders. There are others who are doing a good job, but we are very clear what our strategy on this is.
Okay. And so what would be, even the approximate number, if you could share, what would be the market size of each of these segments?
It's a different question. But yeah, so if we are, let's say, how much? In blocks, we would be on an annualized basis roughly. Ajay, just preempt me.
Yeah, it's 200 crore.
200 crores. So 200 divided by, let's say, 0.19. How much is Ajay?
It is 1,000 crore roughly in organized player.
Yeah, so 1,000 crore in the organized player, or little lesser than that, 800 crore in the organized player.
And for boards and panels, if you could also share that number?
I told you about the panels, 120 crore or something.
Sure.
Board would be what, about 500 or 600 crore in the country.
Okay. And so these three segments are growing in the next couple of years. At what rate would you think that it would grow?
Chirag, we will take this business, which is presently around 300 crore levels, to about 750 crore in the next 3 years, 3.5 years time.
And again, you would say that there would be an equal contribution from all three segments, or that might change?
We would aim to keep it there because it's doing well this way.
All right. So last question, sir. Probably one more question. So are there any scope for exports in the boards and panel segment?
There is. Thank you for asking this question. Definitely there is. Our quality is par excellence, so we are looking at that as well.
Okay. And that would be, again, would it be to the neighboring countries or beyond that also to the developed countries?
If the manufacturing is from India, it will be neighboring countries. If we have an opportunity setting up manufacturing elsewhere, then naturally we can go anywhere.
Okay. So last question, sir. So you mentioned that you're facing some raw material headwinds in this segment also. So what specifically would it be besides, say, transport and fuel costs?
Sorry, raw material issue in which segment, sir?
So sir, if I heard correctly, you said you're facing some raw material headwinds in the building solution segment.
Oh yeah. So
besides fuel and transport, which would be segments which are the areas that?
Cement continues to be a problem for every one of us, I guess, because they have their own way to deal the market. Fly ash, we had a problem with a couple of our factories because due to COVID, some of the power plants were getting shut down. And as you know, earlier, fly ash was coming free from the power plants, but now they have started bidding there because cement guys are, there's a much more demand than supply from the power plants. So that's another issue. So power continues, but we are going for solar power in some of our plants to augment that. So, yeah.
Okay. So in the boards and panel segment, do you also use fiber, which is imported from Russia or Siberia, or it's locally procured?
There is a small sector of it which uses fiber, definitely.
Okay. So is it possible to procure the same locally, or the supply is not available at all in India?
For fiber? No, fiber is international. You're talking about asbestos fiber. It's always procured from outside. So we buy it from Brazil.
All right. Thank you so much, sir, and best of luck for the future.
Thank you, Chirag. You stay safe.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Thank you very much. Stanford, you've done a great job. It has been a pleasure interacting with all of you on this call. We thank you for taking time out and engaging with us today. I hope I could do justice to this call and to all your questions. We value your continued interest and support in your company, HIL. If you have further questions or would like to give us a suggestion, please don't hesitate to reach us out at our investor relationship desk. Thank you, and stay safe. Jai Hind.
Thank you very much, sir. Ladies and gentlemen, on behalf of HIL Limited Conference, we thank you all for joining us, and you may now disconnect your lines.